Good evening, grinders. It is Tuesday, September 30th, and it is the close of the third quarter. So, who all thought that September was going to be a weak month? Yeah, me. I was talking about it, and look what we have here. So, let's take it to the scoreboards first in my Jay Z voice. And we see all three majors, the S&P, the Nasdaq, and the Dow closed positive for the day, and the Russell squeaked out a gain for the day as well. So let's look at the S&P 500 for the month. It's up 3.5%. The Nasdaq up just over 5.5%. The Dow up just under 2%. And what did the Russell do? Let's see. It was up just shy of 3% for the month. So not a bad September. All of those averages are positive for the month. We can't be mad at that. All right, so I titled this episode Top Stock Pick of 2026. So I want to head right into it. We'll talk about some of the companies and how they performed today as well, but I want to get right into the juicy stuff. So that top pick is DraftKings, and this is DraftKings chart right here. We'll take it to 1 month out so you can see exactly what's been going on. And we are definitely on a downtrend, but look at this today. Heavy selling today. Now, there's been obviously selling heading into today, but you might ask, why in the world did it sell off so much today? Well, I waited around. I didn't really see anything as far as research, so I did a little bit of digging. And on top of that digging and using ChatGPT and Gemini, I got some data, some research, and some information to share. And also, I have an article from Wall Street Journal that was posted after the bell today and really explained exactly. But looking at it further, so today, DraftKings stock is down almost 12%, down 11.5%. Past 5 days, down 13.5%. In the past month, it is down 22%. And year to date, we are barely positive after having a pretty nice start of the year, up 0.5% for the year. With that being said, I love this company, and I know I've been talking about it for the past month as it's been falling. I love this company long term. And this is coming from my experience in the gaming industry and the casino industry. I worked in casinos my entire adult life. I was a prior poker dealer, manager in the poker department in a major casino in the United States. And so I really understand the gaming industry very well. And this does not scare me away. Honestly, I see this as a great opportunity. But I wanted to get into why exactly shares sold off today, and we'll come back to the charts here in a second, and I'll kind of show you a pattern I've seen. But Kalshi, and so I've talked about Kalshi previously, maybe not by name because I couldn't remember the name in the video that I posted. But Kalshi is the reason why DraftKings stock is down today significantly, as well as FanDuel, and I believe some of the other gaming companies like your MGM and so on and so forth. So as we said, DraftKings shares are down just about 12% today. And Kalshi is a prediction market platform. And on Monday Night Football, is pretty quiet about this. They launched a build your own combo, a feature similar to parlays on traditional sports betting platforms. And so we'll talk specifically in DraftKings because that is the company that I'm invested in. FanDuel is another company, great company, and arguably number one in the space. And maybe DraftKings is like a 1B, but they're pretty neck and neck. I just prefer DraftKings. I like their daily fantasy sports that they have on there. I do their best ball leagues. I enjoy that, and I just like their platform. You know, they have Kevin Hart, they have LeBron James as far as their ambassadors, and very strategic partnerships with DraftKings. and they're really a pure play sports book as well. FanDuel dabbles in a couple other things as well, so that's why I like DraftKings, and it's cheaper as far as share price than FanDuel. FanDuel's ticker symbol is FLUT, whereas DraftKings is DKNG. Okay, so we want to back up a little bit. So Kalshi, if you are a Robinhood customer, you can probably now, as long as you enroll to do such, you've probably seen the event contracts. And so event contracts are different from placing bets. Event contracts, you're not betting against the house. You're basically wagering against another person, and that's how the another customer opposed to against the house. Whereas your traditional sports book, like a DraftKings, you're betting against the house. Okay. Now, I personally have been using Robinhood's event contracts to place bets for the NFL season, and that's where a lot of this momentum is coming from. I like it because, number one, I'm in Mississippi where sports betting is not legal. And so I can bet on there on the event contracts, and I can kind of bet on the ebbs and flows of how the games are transpiring. A lot of times I don't like the lines that they're posted. I wait to see what's going on in game and make my decisions based on that. And sometimes you can make money on a losing team, a team that loses the game, but they may come back. Or maybe at the start of the game there's a heavy favorite, but the underdog comes out roaring, comes out strong, maybe puts up 7 to 10 points in a football game. And if you still like the favorite, you still think the favorite is just starting off slow, you can take advantage there in live betting. So I do like that. They're saying fee wise, they charge you per transaction for Kalshi, whereas you're getting charged the juice and things of that nature without getting into the deep weeds. I've explained the basics here as we go on for your traditional sports books. So I just want to give you that information in the background, and we're going to go further. So this build your own combo is basically like parlays on your traditional sports book. So I didn't see it on Robinhood, but maybe if you just go to Kalshi, the platform itself, maybe it's there. And mind you, there's a lot of lawsuits and regulation issues with Kalshi right now, and whether they are abiding by the rules. And then we'll touch on that a little bit later as well. But parlays for the traditional sports books are very lucrative, and this is probably a reason why Kalshi wants to launch and get into parlays as well. Except I'm not exactly sure how that's going to work. Are you going to be betting against the house, like betting against Kalshi, or are they going to find a way where your build your own combos are somehow amongst customers, much like your traditional event contracts that you already have on Kalshi? But once there's more information, I'll relay the information. In some states, parlays have been reported to generate significantly disproportionate amount of sports betting revenue compared to single bets. So right there, again, it shows you how impactful and how important these parlays are for your traditional sports books and their revenue that they generate. Now, despite the new offerings, some analysts believe that Kalshi is far from taking significant market share from traditional sports books, and we'll explain why. Kalshi is popular in unregulated states like Texas, and it's implying it's competing with offshore betting platforms rather than the regulated traditional players like your DraftKings and FanDuel, which, in my thesis, is DraftKings shares right now are significantly mispriced, and there is opportunity right now with this big 12% dip for the day. Kalshi has limited offerings and charges a small fee per transaction to generate profits. And so the higher the volume equals the bigger the profits for Kalshi. So their number one thing is they're going to try to expand and get this out to as many people as possible. Whereas your traditional sports books, their secret to success is providing attractive odds on both sides of the contest. This is creating a balanced betting on either outcome. Okay, they want to pretty much, let's just say the Detroit Lions are playing the Green Bay Packers. They want pretty much even amount of betting on both sides, and they'll create the lines to attract bettors to go one way or the other, sway one way or the other, maybe one side is skewed more, a little bit too much, and so they have a favorable outcome. When it's balanced, that is key for the sports books. Okay. So that balance ensures the house makes a profit, and on average, they have a 9% take rate. Okay. Some more stats. This came from Gemini. In the first quarter of 2025, the U.S. sports betting market was bringing in about $3 billion a month in handle. And we've talked about handle off the top of my head. I believe that's just the total amount of money brought in from bets. While one estimate for Kalshi's fee revenue over a 90-day period was only 15.2 million. So that's significantly different, significantly wide number, right? The platform is generating the equivalent of 4 to 6% of regulated markets handle, analysts are estimating. And this is a report from Wall Street Journal. So with that being said, to me, I think this is overblown, and it was a knee-jerk reaction to people that really don't understand the sports betting market and how it actually operates. Okay. And I want to take it back here. DraftKings is going to report in November. And so they'll have the month of September only for that additional revenue they're bringing in for the NFL season. So it'll be a nice boost to the end of the third quarter. Now we have October, November, and December, right? The last 3 months of the year. And that is football all 3 months. That's going to be a big quarter for DraftKings. But this third quarter is also a big quarter for them as well. And we can kind of just look at the charts and where it spiked. So I said November, right, is when DraftKings is going to report, and it'll report for the third quarter. Well, look at this spike here in the month of November, December. You see a spike there from more than likely the earnings report. Then it trades back down. Then we're probably going to get another earnings call in February. Then look here. February, right here, this big bounce up here. Another earnings report. Then it tapers down. And so history does not necessarily repeat itself. But this is pretty much like the same cycle that DraftKings goes through every year. This is where a lot of their volumes come from, a lot of their revenue, a lot of the profits are going to come from. It's going to be from the third quarter and fourth quarter. Number two, we already talked about football, but what's ramping up in Q4? NBA is launching. What just started right now? Baseball playoffs. So we're back in the mecca of sports. Q3 is going to be decent for DraftKings, I believe, and we'll get more information on how Kalshi and the event contracts are actually impacting business. And if we do get a surprise to the upside, I believe this stock is absolutely going to tear higher. We'll probably hit $55, $60, maybe heading into the new year. And so with that being said, DraftKings is my first top pick for 2026. Make sure you get some shares of DraftKings. If you like to play in options, I've been jumping in options. I jumped in some today. And the only way you can see that in real time or see exactly what I'm investing in is by joining our Patreon. You can join for free. But if you want to learn and see our real-time trades, and if you want to contact me and we talk about options and give you one little bit more of a one-on-one interaction, join the Patreon. And this is only $10 per month. We already posted where we made profits of, let me bring it out right now. Last month, when September was supposed to be a down month for us, we profited almost $7,851. This is not just our portfolio moving. This is realized profits off of QQQ. We made $3,600. Apple, $3,000. Palo Alto, $1,700. NVIDIA, which is nibbled, but we have long extended NVIDIA contracts. They don't expire till 2027 and late 2027. So if you want to get in with us, learn how to trade options. Make sure you join the Patreon, join for free 100%. And if you really want to get busy with us, pay $10 per month, only $10 per month to join the Patreon. Enjoy your evening.